From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB. All the stuff you need to know in the day in business markets. My name's Carl Rodder with Danny Akuye. Danny, we just keep going from strength to strength, it would seem. A 5-month high, or more than a 5-month high for the local bulls.
Indeed. It looks like it might have lost a little bit of momentum. No, not according to the SIBO 200. Up 11.3 points or 0.8%. So a cracking good day. And when you think about it, the iron ore miners did not contribute to the performance, which is actually quite significant then for the market to do so well.
Yeah, absolutely. Broad-based strength, but a lot of, actually we'll go through the sectors, why not? A lot of strength coming through the tech space, a lot of strength coming through some of the real estate space, a lot of strength coming through retail as well. As we said, a few themes for the day, 5-month highs, that's the story for our market. Interesting too, because Wall Street's lead was flat, futures implied a flat open, but for whatever reason, investors were in a fairly cheerful mood, and yeah, we did get this rally.
Absolutely. Sometimes markets just want to go up. It looks like it's a bit of a catch-up. It looks like it's a relief rally because markets are in a disinflationary mood, it would seem. Even though what I was reading, it seemed like the Fed was a bit of a hawkish hold. So...
No, it's a fair point. And I haven't been able to see the sort of futures pricing just yet, but I saw at the very front of the yield curve, we did see, a little bit of a sell-off, which would imply that, maybe another hike is considered a slightly, at the margins, higher probability than before the meeting. But again, nevertheless, Wall Street did have some solid earnings that had to be said after the Bell Meta reported. But overall, again, it seems to be sort of, actually quite localised really to our market anyway. So we are pushing higher. It does take us to the point, one and done. That's the question now. Is this the last one? 5.5%, will that be the terminal rate? But now we wait for the ECB. 25 basis points on the cards tonight from them. Yeah,
absolutely. And, the debate still really rages on with experts in terms of, are they overdoing it? Is a soft landing possible? How baked in is inflation? But the one thing that continues to come out is that central bankers are really not going to be pushed into a corner. They are going to remain data dependent going forward. And I think that'll be interesting when we hear from Lowe. Do we hear from Lowe on Tuesday, or we just get the RBA notes?
We've got the RBA decision next Tuesday, which, again, after that CPI figure...
It's obviously chances have come down to 30% or whatever of our
10
rate.
that I saw.
Oh, it's dropped to 10 now?
In the futures market, depends on what you want to track, but it was around 10% when I checked this morning, so a very low probability. But again, data dependent, so we have to make sure that, we have to track this inflation data lower if we want to see this sort of sentiment to continue, I would imagine. But let's get to some of the areas of the market that have performed well today. Look at the tech space. Very strong. WiseTech Global, you'll be happy to know, Zanny, at $85 a share.
It's crazy, isn't it?
Xero, I don't think Xero is actually at its highs. It touched, I think, 127 at some stages last week, but nevertheless, it's up 2.5%. But that tech strength,
again, starting to creep back up to its highs as well. These companies, particularly WiseTech, I did spot a report that it is meant to be a beneficiary of AI. So it'll, again, when these results come out, they're really, really going to have to support those share price moves.
Yeah, and that'll be, I guess, the next hurdle for some of these companies as we approach reporting season. Some other areas of the market that have performed well, and ones that are a little more interest rate sensitive. The REITs are generally higher. You see some, very significant moves there. Charter Hall, GBT, Mirvac.
High beta.
Yeah, there you go. So looking positive today. Also the retailers looking rather strong, especially those discretionary types, JB Hi-Fi and Harvey Norman, up 3.4 and 3.3. Premier Investments too, there you go.
I think Lavisa was also up over 3%. And
that's a fun proxy, isn't it?
Indeed. Yeah, actually no, 2.5%. But really just clearly money wanting to go into the market, bottom fishing in those interest rate sensitive sectors in some pretty, stocks that have not been at the forefront of the rally, excluding those tech stocks.
Indeed, and we have had some news today, mostly production updates. Fortescue, one of the biggest ones, reporting production at the top end of its previous guidance. So fairly significant. There's a year chart there, you can see 26% higher Fortescue Metals, and remaining above $23 per share for the time being. Lithium miner Allkem reported a 1% drop in fourth quarter revenues. Weaker lithium prices have offset higher output. Revenue was $334 million. And Regis Resources delivered 122.5 kilo ounces of gold production in the June quarter. It looks like it dropped off the back of that, however, so maybe not welcomed quite as much by investors. And Sandfire, one that we'll be talking about more, I think, at the in the next few weeks and months as we sort of assess this sort of China recovery or non-recovery if it happens to not materialise again. But its quarterly total production came in at 17,500 tonnes, with the stock pushing higher today.
And of course, why it's so important is that it's very hard to get copper plays. You have to look at BHP because they bought Oz Minerals, or obviously Rio with their big Mongolian, whatever it's called. And this is one of the purer plays on the market.
Yeah.
If you want copper. So it is getting more challenging, and of course it is one of the metals that the market is extremely bullish about when it comes to the energy transition.
Yeah, for sure. And sometimes just a simple matter of flow, isn't it? And the flow has to go somewhere, and if Sandfire is going to be the beneficiary of that, then well, power to you as an investor. But let's just get a look quickly at Karoon Energy as well. Also out with a production update.
To the CEO today,
okay.
That will be on the the website, an update there. And
any kernels of information you pulled from it at all?
I'd like to say I did, but I'm not sure I did. But clearly they had that unscheduled stoppage where they had to took out a whole lot of production for this quarter. They are going to have a scheduled production cut, or let's say they've got to do some repair work. But no, I mean really the company continues to focus on cost reduction, continues to work on its profitability, continues to look for acquisitions, and the full year results will be out on the 23rd of August.
Okay, some more news. AGM, Macquarie had, the attention of a lot of investors today. I think you can see it down by 4.3%. Flagging weaker trading conditions. A lot of that,
it's not really surprising.
Apparently, to do with its commodity trading in particular, I believe. So just flagging some weaker activity there, of course.
But they had a base effect. It was so strong last year. I think the market is it's they haven't actually flagged anything different in my humble opinion. It's just the market got ahead of itself again.
Yeah, and its asset banking and financial services business, its contribution to profit substantially down, and it said it's primarily due to lower investment-related income, again from green energy investments. So that was one that, again, sold off today. And Megaport, however, reported a normalised fourth quarter EBITDA of $11.8 million for FY23. So that's a company that reported today. The company said results were driven by revenue growth and is focused on cost control going forward.
And what a rally we've had today.
Oh,
and
there you go.
That is, of course, one of the preferred stocks, along with Macquarie Technology, I should say. Keep on getting that wrong. And NextDC in terms of the AI thematic.
Yeah, and also GQG Group says it intends to submit a non-binding indicative proposal to acquire funds management group Pacific Current. So that was also making in the corporate news today, I should say. But let's get to the stock of the day, because one thing that seems to be defying gravity at the moment, and certainly defying expectations of a slowdown, is the leisure and travel sector, and in particular, corporate travel management out yesterday with an upgrade to profit guidance. It was our stock of the day. Listen to what our guests had to say.
Rise, and I'm very, very happy to have a decent position in corporate travel. I wouldn't say, you could buy it now. It's not saying, it's definitely not a sell. It's a hold for me, but I'm very confident in the future of the business. And I think it's way better than Flight Centre, because it went into COVID in much, much stronger position than Flight Centre did, even though Flight Centre didn't have any debt at the time. Because of all their store network, they suddenly had a massive bleed, which corporate travel didn't have. They shut down half the network. They did a massive capital raise. So I think Flight Centre's got like 40% more shares than it had before COVID. So you've been diluted significantly. It's done the Hello World deal as well, but I still think corporate travel is a much more efficient, focused business than Flight Centre. Flight Centre's okay, but I think corporate travel is good.
So looking back at the earnings potential, and given the fact that it's come out with almost doubled EBITDA guidance is just insane. So it just goes to show that they're benefiting. Well, we're looking at the revenue breakdown as well. So they're really benefiting from European travel at the moment because the weakness is in Australia for this company, but they're definitely seeing a surge in revenue in the European Union and European region, especially in the UK, is really offsetting the weakness in Australia. So again, once Australia comes back online, then Bob's your uncle.
Bob's your uncle.
Corporate travel management, Bob's your uncle. And my uncle is Bob.
Well, there you go.
My grandfather was as well.
Oh.
So I've got a few Bobs in the family.
I think that was more code, like there's more upside here. We like it.
All right, so well, there's Grady Wolf's 2 Bobs, Mark Morland as well. So fairly positive there overall. But let's get to our guest for the next 10 minutes or so. Fraser McLeod from Shaw & Partners is standing by. Fraser, maybe your 2 Bobs on corporate travel management, if possible, very quickly. Do you like the space? Because it certainly seems to be fairly resilient.
Look, at corporate travel, I do remember from many years ago when they were shorted pretty heavily, and a few red flags there in terms of how they organised that business. Maybe a few, offices that were empty. So I'd always be a bit cautious on that one. And the management was always very slick, almost too slick in my mind. So not a stock that I would closely follow, and certainly not a stock I would have within portfolios. Certainly Flight Centre did have the big capital raise. What I do think the theme we have to be aware of there is that, and this is just anecdotal, but I'm sure it's the same really across the world, is whenever we get on a flight these days, or whenever you go to whenever you're in a business lounge, it would seem that it's just full of baby boomers, isn't it? These guys are, it's the third of the economy that's doing really well. They don't have any debt. It doesn't matter if interest rates are going up. They don't care. In fact, they actually make more money because interest rates are going up because they're still holding on to cash, and the wealth that they have within their house seems to be just keeping there or even growing again. And the COVID has meant that they know that they want to make the most of the last few good years that they have left, and they'll pay any price. So probably corporate travel gets a bit of a bump out of that. Flight Centre does as well. They all do. Hello World does. Hold a few of those. So yeah, the baby boomers are driving the travel market, and there seems to be no end in it. If you're in your 20s and 30s, you're begging the bank of mum and dad, hopefully if you can pay the rent or pay the mortgage, but the rest of the time, the baby boomers they're in control. They always seem to be, and it doesn't look to be changing anytime soon. So the travel dollar still seems to be very strong.
Indeed. The only thing I would say is apparently the Four Seasons in Sicily, which is in White Lotus 2, their air conditioning cogged out this week. So there are a lot of billionaires around the world getting roasted at about 42 degrees. So there might have been a few hot baby boomers there.
Yeah, the oldies won't love that.
No.
Never mind. I'm sure they can buy themselves an ice cream.
Indeed. Anyway, let's move on to Macquarie, because I didn't particularly think these comments at the AGM were so surprising. I mean, they have been flagging that last year was a record year, so you've got a very high base effect. How did you see it, Fraser?
Look, you're probably spot on there. I mean, Macquarie has this an incredible record of just smashing expectations almost every time, and the share price continues to march on, and so whenever there is a bit of a kink there, I think it was a fairly significant decline today from the commentary that was given. So in their commodities and global markets, that had such a bump from volatility that came in from 2022 with Ukraine just turning everything upside down, and they made lots of money. Margins were enormous, and so we're probably seeing maybe the hangover effect or the reality of the sobering effect within their business of the immensely good times that they had are just reverting back to the mean again. So decline there. Also on their business. Everyone still thinks of Macquarie in a way, especially retail investors, of the Macquarie advisor, similar to the type of job that I do for clients. That is just not significant at all for Macquarie. They almost don't have that business at all. It's just not of any scale anymore. What is of scale to them is their asset management and their infrastructure business, and that hurts them if there is lower volumes, lower activity. It's just quieter times for Macquarie, and they're fessing up to that case. So quieter times, the stock's getting sold off, because their outlook was. It's rare for them to say that, but their outlook is slowing, and the Macquarie share price, if you look at it today, it's the same price that it was 12 months ago, and that's unusual, but sign of the times.
What about CSL? It's a very rangy stock. It was up today, but I mean, I suppose, 1.8%, around
but it has fallen.
$67 per share, which again is sort of at that bottom of that sort of long-term range. How are you seeing the company at the moment?
So, look, it's still a great growth business. If you pull up a 20-year chart on CSL, it's only going in one direction. So this is still a great growth business with incredible management, and the factor in the sector that drives that business is only going to get stronger. So I think it's too easy to get caught and say, the bad news is here, or it's all over, or they haven't been able to grow over the last little while, so they're finished. Fundamentally, they're not trading on 40 times. They're probably trading about 30 times forward, which is probably as cheap as you're going to get CSL. So they are a buy. They're probably worth about maybe 340, 350 in terms of Aussie dollar terms. And the key driver on their business, they did have harder times throughout COVID. They need to be able to collect plasma, which they make much of their money from. They need to be able to collect plasma from humans, especially in the US. They pay in order for that to happen. It's taking a while for that business to come back to the norm again post-COVID. But they also do have some cracking drugs, especially for Alzheimer's in the future, in the pipeline. It wouldn't take much to move the dial the other way on CSL. So still believers in CSL. We've actually upped over the past couple of months. It's a core portfolio stock for us. We've upped and increased our weight in CSL. It is one of these stocks that you can get a bit bored with, because it tends to sort of it tends to move in steps, the share price, once it does start moving in the right direction, you can kind of second guess yourself and say, I've missed it. You haven't, because you need to take a more of a medium-term view over CSL, and the growth is still intact. If you're taking a medium to longer-term view, it's probably worth 350.
Sounds eminently sensible, Fraser, and always
eminently sensible, yeah.
Exactly. A lot of common sense, which is not always very common. If we have a look at copper producers, and obviously we lost Oz Minerals. It's you have to get it through the big stocks. Except we're talking about Sandfire earlier. What are you liking in terms if you're trying to get this super metal for the green energy transition?
Yeah, I mean, look, so we're electrifying the world. Dr. Copper is just simply moving with global economy immediate outlook, and that's a shame, because everyone knows that there is this incredible shortage in global needs for copper, but not today, and that's why the copper price itself has been very, very low. But if you actually look at the volumes of copper that are going to be needed over the next few years, it's multiples higher than where it is at the moment. The challenge also for Aussie investors is. And everyone really, from retail investors to fund managers, well, we're all very mournful, aren't we? Because our key play, and which was really a South Australian play as well, where I'm based, of Oz Minerals, has been stolen from us. What happened? The BHP just stole the business, and we can no longer invest in it unless we actually buy BHP, which is no longer a clean play. So, and probably if you're the type of investor that wants to invest in copper, you maybe don't want to invest in iron ore, because that's not the key theme that you want to play. So where are you going to go? You could invest in Sandfire. You can invest, which is not a bad place to be, and I think today, the stock's up 10% today, they're probably worth $7 by them getting rid of the Grusa. That's maybe a weight around their neck that they're finally getting rid of. You could invest in Evolution. Again, not a clean play, but we like Evolution anyway for the gold. And if you were to believe that there was to be a copper price recovery over the next few years, which let's just say there has to be, then the earnings of Evolution is going to go from, say, 30% to 50%. So actually, Evolution should be a good place to look. Other than that, then you're really going to have to look overseas. I mean, again, it's pretty difficult to find a clean play. Maybe you could buy Tech, or maybe you could buy a Metals Acquisition Corp for their copper exposure, but it's not as easy as it used to be, and we're all a bit mournful because of the fact that we can't type in OZL and buy a pure copper play here in this state and here in Australia. It's a shame.
Lest we forget, and at least we'll have obviously your good self to hopefully guide us to where we should go when it comes to copper plays and more. Fraser, great chat. Really appreciate it. We'll do it again soon. Fraser McLeod from Short & Partners.
Always a pleasure.
Thank you.
Thanks again. Cheers. Bye-bye.
There we go. Okay, let's get to the leaders and laggards now, shall we? There we go. Imugene always moves. Megaport, though, that's
upgraded.
Yes, a true story there. And Sandfire Resources, there you are. Some of the flow going into that company, especially after its production update.
I think Insignia also, didn't they have an announcement today? I'm pretty sure they did.
Could do, and maybe Ingenia as well. It's starting to get a little bit little-t and rhymey here. But let's look at the laggards now. And,
they had a quarterly business update, so obviously positively received.
Interesting. So much corporate news. It's only going to get busier as well. Regis Resources, we covered that production update a little earlier. Disappointing the market, down 10%. And those coal plays, your beloved coal plays, down 5% today after running up. Yeah, exactly. And Core Lithium still in the wars after that activity report. So,
yes, that has been in the wars, hasn't it?
Punishing it.
Yeah, there were a lot of downgrades, though, to be fair, on that one, and both in terms of price targets as well as price targets and
recommendations, everything, let's get to the small cap leaders and laggards.
Red Bubble, woo, it's back again.
Yeah, everyone's
and
back
Nuix, wow.
Oh, wow, there you go. So again, people are obviously in a risk-taking mood on a day like today. Also, the laggards in the small cap space. There we are. Panoramic Resources down 40%.
Bubs had another announcement today as well, and that's probably what's contributed. I think they've still got problems. It's an ongoing travails going on. Yeah. So, the Bubs board. The board retained as all resolutions voted down. So talk about a world of pain there.
Yeah. Okay. So down. What's that? Another 13%. Unlucky for some. Certainly unlucky for the Bubs today. All right. Let's quickly get through what's happening overnight. A lot is the short answer. ECB decision, US jobless claims, US advanced GDP. So US GDP comes out in 3 installments, advanced, preliminary, final. This is the first GDP figure for the quarter, so it'll give us our best read on where the US economy is at. That'll be, what's the June? It's, Q2, I guess.
Yeah, Q2, yep.
Yeah, so however they refer to it. And then US earnings, Macca's.
Yep, that'll be interesting.
Ford.
Yep.
Also interesting. A few others there. Intel as well. And tomorrow, BOJ could be, they're not expected to move anything now, but certainly we're expecting that a tweak of the yield curve program could come eventually, so we'll watch out for that. Aussie retail sales. Let's see, whether the Australian consumer is continuing to spend or not.
Apparently online sales absolutely collapsed in July.
Oh, really?
Yep. That's what I've been reading. Yeah, absolutely.
All right. Well, that does it for us
Except
today. We'll get one more market check.
Yeah, the ASX 200 closed up almost 54 points to 7,455.73%. So those little rocket emojis are starting to fire up.
Absolutely. To the moon, perhaps, or at least
zoom to the moon.
To record highs.
I didn't tweet that. For anyone that follows me on Twitter, they would know that I refrained because I am the kiss of death.
Are you? The contrarian Danny indicator.
I just didn't want to destroy the rally.
Okay, we're getting the wrap up here. So we'll finish for another day. But as Danny just said, a good one for the market. 5 months high. If you do want to catch up on everything that we discussed today, it's on our website.
And we have the last call tomorrow.
So we'll see you tomorrow afternoon as well. But tune in tomorrow morning. Have a lovely night.